All right, welcome to another S&P 500 analysis. This is a live trade watch here. It's basically a follow-up on the previous video talking about liquidation break, and this time we're going to talk about a little bit of a short squeeze. What you are looking at right now is the live chart for the SPY on your left and the ES, the E-mini S&P 500 on the right. Let's take a look at here. Right here, we see that there is this volume profile. It is building up volume here. So in other words, there's a lot of trading starting to occur here near the low. And also notice that we have a little cutoff on the sellers here. All right. So right now, basically, you got a lot of these legs short because somebody have to be buying these, and someone is selling them. So you got all these legs short, the weak hand, and then we got a little squeeze, and we squeeze it up to the rewrap. And let me change the color of the pen to the rewrap right here, and you can see that it came up and just tagged that rewrap and came back down. See how mechanical and technical it is? Then you know the short time framer, the intraday traders and the scalper is in control of this market right now. Right, they are trading all these technical level, so that makes it easy if you understand these nuances, in the market profile and the market structure. Same here on the ES, the E-mini S&P 500. You see the same thing, building up volume here. So you basically got a lot of legs short, try to short it here, and then once they squeeze it, these we can run for cover, and they pump it up to the rewrap and then come back down. Okay. Now the reason why this thing works is if you look at it in this case here, all these volume is building up here. And what is the POC? The POC is up here. So that's the value, the most accepted price is up here. Right. So obviously, this is not gonna hold unless it start building up and start shifting down the POC down to a lower level. So once you start seeing these kind of profile characteristic sort of established, then kind of get prepared to initiate some low risk, counter trend trade. Even though we know today the market is trending down, right? But here, basically you could put a stop right here because right now you know that the low probably is in because you got the seller cutoff. I mean, in other words, you got lack of willing seller who are willing to sell down at this price right now because they feel that price is too low for them to sell. So when the price come down here, there's not going to be that many willing sellers to sell it down there, and any buyer come along, they basically have to lift the bid to try to find a seller at a higher price to sell to them if they really want to get in. So that's how you establish these low risk trade with some nice target here by watching the profile and also watching the price action. Okay, the market is closed now. Let's go and take a final look at the chart here on the SPY. You see that it came back, and actually the POC was up here and shifted down into the close, the last couple minutes into the closing bell. We saw this flush and took out this low here. Earlier, when we initiate this trade here, this is a low risk trade, and essentially, if you look at the E-mini S&P 500, now let's say you got in here and you got out somewhere around here. That's a this is a 20 handle swing, right? That's a $1,000 contract of potential profit here. So that's how you establish some of these, look for these low risk counter trend trade, utilizing the market profile and also some of the these market generated information, such as the rewrap. Okay, the session rewrap. Don't use those anchor rewrap. Those do not work with this type of strategies. Okay, so I hope you enjoyed this video and find it useful and informative. And be sure to smash that thumbs up. Help me promote this video. Thank you for watching and stay safe.